You ever look at the financial markets and just see, well, pure chaos? It's a tidal wave of data, headlines, and price swings just coming at you all day long. So what if I told you that the top pros don't just get tossed around by that wave? Nope, they have a system to navigate it every single day. And today, we are pulling back the curtain on exactly how they do it.
I mean, this is the big question, right? You've got news breaking in Asia, economic data dropping in Europe, random tweets, earnings calls, Fed speakers. It is a relentless fire hose of information. And trying to pull one clear, actionable signal out of all that noise, it can feel completely impossible.
And right here, this is the secret. The pros don't just react to the chaos. They have a structured, repeatable framework they run every single morning. Seriously, think of it like software for your brain, a macro operating system. It's designed to take all those chaotic inputs and spit out structured, logical outputs. It basically turns guesswork into a process.
Okay, so how does this thing actually work? Well, like any good piece of software, it all starts with the inputs. And step one is what we call the daily snapshot. This isn't about some deep, hour-long analysis. Not yet. It's about a lightning-fast, disciplined capture of the most critical pieces of information.
The very first thing you do is classify the environment. You gotta give the day a name, a label. Are we in an inflation regime where every single asset is moving based on price pressures? Or maybe it's a risk-off day where safety is the only thing that matters. That one headline becomes the lens you see everything else through.
All right, next up is the dashboard scan. This is meant to be a rapid-fire check, literally done in seconds. First, you look at the risk parameters. Things that tell you how brave the market is feeling. Think Bitcoin. Then, a quick glance at oil. That's your main gauge for energy and inflation. And finally, the S&P 500, which gives you the big picture view of the stock market's health. Boom, boom, boom. And right after that, you check the macro vitals. First, the DXY, the US dollar index. Is money flowing into the dollar for safety or away from it? Next, the 10-year Treasury yield. This is basically the world's most important interest rate. It affects everything. And finally, the VIX, the so-called fear index, which tells you how much turbulence the market is bracing for. You put all that together, and in less than 30 seconds, you've taken the pulse of the entire global market.
Now, here's the most important part. This isn't just about writing down numbers in a spreadsheet. The whole point of this rapid-fire scan is to force an immediate, one-line interpretation. What's the story here? What is this specific combination of moves telling me right now? It's all about creating that high-level synthesis. On the spot. All right, so we've grabbed our inputs. Now, the system's analytical engine really kicks into gear. This is the part where all that raw data gets processed. We move from just knowing what is happening to actually understanding why it's happening. This is where we connect the dots.
And the core idea behind this engine is something called cross-asset structure. It sounds complicated, but it's actually a really simple and powerful idea. Nothing moves in a vacuum. The price of oil is connected to bond yields. Bond yields are connected to the dollar. The dollar is connected to tech stocks. The system is built specifically to map out and make sense of all these relationships.
The way the system does this is by putting assets into logical buckets. So think of it like this. Energy, that's your main signal for inflation. Bonds and the dollar, they tell you if money is getting tighter or looser in the economy. Stuff like stocks and crypto, that's all about the market's appetite for risk. And gold, that gives you a really clean read on what's happening with real yields. Each bucket is a piece of the puzzle.
And all this comes together in what's called the macro transmission chain. The easiest way to think about it is like a set of dominoes. A move in oil prices starts a ripple that affects what people expect from inflation. That in turn forces bond yields and the dollar to move. Those moves either tighten or loosen financial conditions for everybody, and that ultimately is what causes risk assets to react. It's a clear cause and effect sequence, one domino tipping over the next.
Okay, so the system has its inputs, and it's run the analysis. But look, data and analysis are pretty useless if you don't have a practical, forward-looking output, right? So the final stage is all about translating that deep understanding into a concrete plan of action.
Now, what's really important here is that the system doesn't try to predict the future. That's a fool's game. Instead, it prepares for multiple outcomes. It generates a clear set of scenarios for the next 24 to 72 hours. You've got your base case if things stay the same, a risk case if a certain trigger gets hit, and a tail case for that low probability, high impact event. It's all about being prepared, not about being psychic. And the output isn't some simple buy or sell signal. It's way more sophisticated than that. It's behavioral guidance. It tells you how to act.
Is this a market where you should respect the price range and buy low, sell high? Or is it a market where you should sell into every rally, what they call fading breakouts? It frames how to behave, which is so much more valuable than a simple directional guess.
A really robust system has to be self-aware. It has to know its own breaking point, and that's the regime break trigger. It's a predefined level, let's say oil shooting above $95 or yield screaming past 4.5%, that if it gets hit, the entire analysis is now invalid. It is the big red line in the sand that says, okay, everything we thought we knew just changed.
So, we've got the inputs, we've got the engine, and we've got the outputs. It sounds like a complete, perfect process. But now we get to the most important part, the really nuanced part, what this system's true purpose is, and where it falls short.
Which, of course, brings us to the million-dollar question. Is just mastering this operating system the whole secret? Is the system itself the edge, the alpha? And the answer, maybe surprisingly, is a hard no. And this right here is the key to everything. The system, it provides the structure, the discipline, it does 95% of the heavy lifting. But the real professional edge, the true alpha, is that human ability to sense that the regime is about to flip before the system's official triggers get hit. See, the system's job is to handle the daily grind, to automate all the known relationships. And what that does is it frees up the professional's brain power to focus on what the system can't see yet. That subtle shift in the speed of bond moves, that breakout in oil that just feels different this time, that gut feeling that volatility is about to wake up. That is the ghost in the machine. That's where the real skill lives. And so ultimately, this is the world the pros live in. They use this incredibly powerful system to understand the current battlefield, but they know, at any moment, the whole war can shift. The system gives them a map of today, but they are always on the lookout, always listening, because the market is always deciding who's really in control.